Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar has continued to trek higher overnight and now posts a fresh intraday high of 66.45, which was where I called the supply zone and this downtrend from a touch. Rejected the level, but now looks like it wants to have at least one more look towards that region. It was interesting to see, first of all, that the RBA cut its official interest rates yesterday by 25 basis points to 0.5 or 0.5% to new record lows. The statement accompanying the decision said that the RBA decided to cut rates to support the domestic economy as it responds to the global corona outbreak. The RBA said that the outbreak had clouded the near-term outlook for the global economy and means that the global economic growth in the first half of 2020 will be lower than earlier expected. Following that, we had the US Federal Reserve hit the emergency button and cut rates by 50 basis points. That triggered the market to rally towards that top side as the US dollar briefly sank. With the upside reached at 66.45, I do anticipate the market look back towards the support at 65.75. A break beneath there would give further scope to the downside and look towards 65.30.40, and then back to the lows seen around 11 years ago at 64.20.65. With the Fed unexpectedly hitting the emergency button and cutting its policy rate by 50 basis points to 1% to 1.25 has eased market slightly from the economic downturn stemming from the spread of the coronavirus. Although wild swings followed the unscheduled announcement until investors made their mind up, and it only took a little while, of around about 15 minutes if you look at the stock market, that it backfired on the Fed as the Wall Street all three major indices plummeted. With the market rallying to a high of 112.13 and where the supply zone is around 112.20 has been respected and therefore may see a pullback towards 111.45 and a break beneath there would give scope down to 110.90. It is viewed that only here would give further scope to 110.10.20. We are extremely overbought, so it does warrant a pullback today. Let's see if the market can take the challenge back to 110.90. Dollar yen reversed from the region of 108.50.60 area, as you can see, and plummeted back towards the call of where the base is at 106.80.95. It is assessed that from the lows, the market is still struggling to rebound, although we are a little bit oversold, but the trend is clearly there. A break of 106.80.95 would open the way down towards 105.60.80. The intraday low was 106.92, so there is still a little bit of support there. Not quite giving the call to the break to the downside, but keep an eye on that as a close under 106.80 would initiate the move to 105.60.80. Technically, I was looking for this market to reverse due to the inverted hammer, and from that we've seen a rise back up towards around the 128 region. Although I'm not overly bullish, the Bank of England has hinted that it may cut rates on its next meeting, which is later on this month, as the global central banks all now seem to be following suit in cutting rates, starting with the RBA. Now we've got the US Federal Reserve, and next on the list is Bank of Canada, and then maybe the Bank of England. So keep an eye on that if you're trading any of those currencies. For now, though, I feel the market will foul up towards 128.45.60 and look back to the downside, which is still seen around 127.25 and reassess from there. Oil still seems to be holding in there, and also looking at dollar CAD, the shooting star confirmation to the break. It now suggests that the resistance is being challenged roughly around 133.85 to 95. I'm not going to get overly bullish until we see a close above there in New York, and while intact, I still believe the market will look back down towards to 133.15 to 132.75. Well, this time around, after seeing $87 fall on gold, we saw a rally of $65 overnight, after the market managed to break the level of 1,610 and reach its objective of 1,630 to 36, which has left me slightly neutral. I am sitting back at the moment and not holding a view at these levels because of the vulnerability of how the market can actually sharply turn around at around 1650. As you can see here, it plummeted $87. Now, the resistance is seen around 48 to 58 to 60. And the downside sees support at 36 to 26 to 29. So we're right in the middle of this range, I believe, and look for further evidence to the bull case. And if we see the market clear, possibly the highs that are seen around 60, then yes, we could see a rise up to maybe 88 to 98. I like the way these technicals are set up, so I am swaying to the bullish case. But with my target reach from the break of 10 up to 30.36, I'm quite happy to take the view and put it on the side for now and see where we head in the next 24 hours. Oil with this Marubozu candle still holds bullish. I'm not going to turn yet, as this candle is an indication that further risk is to the upside. And the immediate target seen at 48.35 to 48.95 to maybe even $49.65. I would get a little bit concerned if we see a break beneath half this candle, which is somewhere around $45.76. But I'm not going to turn bearish until we get a break beneath 44.80.95, with the immediate support seen at 47.10. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report. And I hope you enjoy the great start to this new day.